Scott, your full-year target for the S&P 500 is 2,800, an area that we've been around for a while. I guess that suggests your level of caution at the moment.
Well, Wilford, it is. And I was gone for 2 weeks vacation, and it's pretty much the same thing as just like Sarah mentioned. But, really for us, stocks are pretty close to fair value. This is really where we expected stocks to finish last year. So we expected decent return last year and not much this year. So, for us, I think the S&P 500, ever since we crossed the 200-day moving average around 2740, we've been kind of grinding through all this resistance. And then today happened, we pushed the top end into some further resistance. And I think this was just traders taking some money off the table. I think Mike's right. I think this is a non-event. Certainly there's some positives from trade, are the potential positives, but really to push this market higher, what you probably need is a much better than expected trade agreement, and certainly the market's cautious in terms of that.
Let's talk more about trade negotiations reportedly in the, quote, final stages as the two sides are planning a summit at the end of the month. Mike, we go around the houses on this of how much is priced in. Nonetheless, this as an issue, if it is behind us, regardless of really what is in the detail, the day we get that announcement, would that not be positive for markets?
I don't know if literally on that day. I do think that it would be a net positive to be rid of the issue. If in fact that's what we're going to get, because it's almost like you see people in the absence of any firm details of what's actually going to be agreed to, people keep going around on this notion of, well, if the tariffs stay in place and maybe it's going to be some equivocal agreement. I've never thought that it was the make or break issue in itself for the markets, but it's no doubt been an annoyance and a distraction and a headwind to some earnings estimates.
You do bring up an interesting point, which is we're starting to get to some details of what this is going to look like. And Scott, looks like they're going to roll back tariffs on both sides, and that there's going to be some sort of enforcement mechanism and, some of the Trump administration demands. Does the market care? The market's not a China trade hawk, is it?
The market is okay. We keep hearing all of these things. Now we need something solid to hang our hats on, which we really haven't had in this whole negotiation process. So, I think the market is hopeful. I think there's reasons to expect some positives here, but the magnitude really is a big deal that's going to determine whether we go higher or lower. I mean, if China and the U.S., if China agrees to buy, more soybeans from us and that's about it, well, the market's not going to like that. But if we see some real intellectual property, some joint venture things, some enforcement, maybe that pushes the market higher. But this trade friction plays into global growth, and I think we would argue that really this overall global growth has been the concern. We're not as concerned about China necessarily, but we're certainly concerned about the Eurozone.